Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. We're going to kick off this Monday Charts and Coffee session with the calendar here. So obviously we're going into a quirky trading session where it's really a bank holiday, but it isn't, right? Because we can't have two successive days closed in the markets unless they're Saturday and Sunday. So that's why we have this quirky little half day. Although, take a look, we do have some ISM data, which is a very important piece of data that would be put into the inflation category of what the Federal Reserve will be looking at in terms of, their justification for hiking rates or for pausing and whatnot. So heads up, we do have a hot zone today. So just before you decide, we'll kind of phone it in, just remember there is a hot zone at 10 a.m. And then, that's really the session, right? So we're going to have, by the way, about an hour, maybe an hour and 20-minute session this morning in the Sector Secrets Mastery Room. Yeah, we might take a look at some day trades. We'll take a look at the swing trades that we set up last week and see the follow through on that. But again, this is really very much just sort of a formality in terms of the open. This month, this week, this quarter really starts on Wednesday. All right. But again, that hot zone will be one to keep an eye on. All right. Hey, by the way, got a couple things on my desk here. In fact, my desk is back to disaster levels of books, but got some cool books that I've been into. So anyone looking for productive distraction, Tao of Charlie Munger, really, really good. It's a little quickie little read. It's actually kind of a good, it's a good little read here. Tao of Charlie Munger. And then this one has nothing to do with trading, but then to me, it kind of does. And I don't know how many of you fast or have thought about it. This one's pretty cool. I know, guys thinking, I don't need to read Fast Like a Girl, but this is about fasting. And I don't mean intermittent fasting, but it's pretty cool. Different fasting cycles and so forth. Pretty neat. So if not eating gives me an edge in trading, not eating I shall do. All right. So if you're looking for some productive distractions, there's two of them right there. The new season of Jack Ryan is pretty good. I got to say, the last two seasons where they turned him into some sort of Marvel comic superhero, pretty disappointing, but this season's off to a really good start. So there you go. So some good things to do rather than get into trouble on illiquid days in really a holiday affected market trading session. Okay. So that kicks that off. Let's jump on over to the charts. And as always, if you have any questions, let's see here. We'll go first come, first serve. Okay. Just a quick jog through what we're dealing with. Now, remember, for most of if I look back over the past 23 years, just go 2000 to 2023, most of that for me was dominated by currency trading, by specifically Forex trading. There are no days off in Forex. Not really. There's 2 days off a year, Christmas Day and New Year's Day, right? So a day like tomorrow is just another trading day for most of the world. So when I think about the markets that we trade, it's not just this 9:30 to 4 world. I think a lot of you know that. There's, I don't even like the word pre-market and post-market. It's just somebody else's financial center, somebody else's market. So when we talk about pre-market, that's Europe and the UK and the Asian session close, right? When we think about post-market, there's a little bit of lull, but it's where the Asian session picks back up. So it's all, the sun's rising somewhere on the planet, and Forex just really drives that home. And I mention that because futures markets are really much more like that 24-hour psychology that's dominated Forex. It isn't just about what's happening in New York, right? It's not just between the span of, New York City and Los Angeles, right? There's a big financial world out there, and we do inherit a lot of that psychology. So you can see here, little bit of weakness going into the open on the S&P, and a little bit of weakness going into the open on the Nas. And just not to get caught up in the 5-minute time frame, but rather keep in mind that, it's a again, great big psychology. We are still trading above. So if you say, oh my gosh, it's bearish this morning. No, it's really not. We're still trading above the previous session close, which we call the line in the sand. Those of you that have taken my day trading class for the past few years know. All right, Rog, where is that line in the sand? Where's that psychological level from which people would think I'm up or down? And it's usually going to be the cash close, right? This is for futures. This is for stocks and ETFs, of course. So we're still above that level on the NAS. So that's relatively bullish in terms of opinion, in terms of sentiment. And same goes to the S&P. That means we want to keep an eye on the close. So for example, 44.82.5, keep that in mind, because if we start to lose support, if we start to run sell stops through that level, the bearish momentum picks up. That's sort of the tripwire, right? That's what we call it, the line in the sand. A tripwire would probably be an even better way to describe that, right? Because it's not just a line. It's a line that has a consequence, right? There is something that could happen on the other side of it, right? So think of it that way. So keep an eye on those closes from the previous session. All right. So as always, good morning. Good morning. Hey there, Stacy. Hey there, Mark. All right. So first question up for this morning from Gurneet, who asked, slightly out of the money call options for Starbucks. What do I think? All right. So everything is going to be predicated on the structure of Starbucks. And then on top of that, where is Starbucks in relation to where it's weighted? So if I move up the ladder of weighting, right, stocks, sector, index, right, from the smallest unit, since we're starting with Starbucks, it would be the XLY, Consumer Discretionary ETF. Starbucks is in a downtrend. So right away, Gurneet, on the 1 hour chart, maybe there's some legitimacy for my thinking long, but on the daily, there is none, right? So I can look for an oversold buy in Starbucks if it gets down to at $97.50. If not, I really don't want to be long Starbucks. And let me just kind of drive this home, which is if I go ahead and crack open the XLY, the Consumer Discretionary ETF. So these are all the stocks that are weighted in XLY in order of their weighting. And what I have here is a situation where of all the stocks that I could consider buying, Starbucks is at the very bottom of the list. It's on the top of one list, but generally speaking, on a relative performance list, it and Nike are at the bottom of the list. The only merit that I would say something like Starbucks or Nike, maybe McDonald's would have is playing catch up, right? So if you don't want to be focused on the strongest names, and that would be things like Amazon, that would be things like Tesla and Home Depot, Lowe's, TJ Maxx, Chipotle, right? If you don't want to focus on the names that are already moving higher and you're thinking, hey, if this is a rising tide, right? If this is the rising tide, so again, this is the XLY. And if this is the rising tide, what we have is ultimately the laggard, right? We have the laggard here. So if I think about where we are in this world of XLY, right? So there's the view that we're looking at, right? XLY is the symbol in the upper left-hand corner. And then the next 11 smaller charts are the individual stocks weighted in order of their significance in XLY. So that's not what I want to focus on. And I think my head is over Starbucks, right? So let me show you. There's Starbucks, right? My head is right over it. There it is in the corner. Yeah. So it's the one relative underperformer there. So I would say no, unless the plan is that it's going to play catch up. And if you want to play catch up, right, look at Nike, look at maybe O'Reilly, maybe McDonald's, but I would put Starbucks. And by the way, it's still a symbol that I'd keep an eye on for that reason. But if you're looking for relative outperformance, remember, gang, things that are already moving higher will tend to move higher. So I don't want to always focus on the laggards Retail traders tend to do this. They tend to focus on the absolute strongest names, so they buy into higher highs, or they tend to go into laggards. In the middle of that is the often neglected stocks that are just sort of trending with the overall tides, right? I say tides because there's a sector tide and there's an index tide. So I hope that makes sense, Gurney. And if that resonates with anybody, by the way, if you're thinking, gosh, Rog, I've never thought about building my watch list and my trading list in that way, check out what we're doing in the Sector Secrets Mastery. That's the not so secret of the way that I build a watch list, the way that we understand sector rotation, the way that we day trade. It's all rooted in that. Okay, so thanks for the question, Gurney. Richard asked about IoT and Tesla. IoT is in an uptrend, so I would look to buy a dip, something along the lines of what you would have seen on the 23rd, 26th, Richard. And then in Tesla, all right, let's take a look at Tesla here. If I'm looking at Tesla, very similar situation, right? Buy the dip. The dip could be the daily price movement range. The dip could be the 34 EMA wave. The dip could be Darvis support. Look, a dip is defined by different traders. A dip is simply going to represent, within the context of an uptrend, overall support, right? What's the backbone of the uptrend? Remember, most retail traders, if the 80-20 applies to everything, and I believe it does, right? If we think about the Pareto principle, 20% of traders like myself are waiting for that pullback. 80% want to buy into higher highs. It's also the same 80% that wants to short into lower lows. So what I want to remember, that's a good cup of coffee today. Ooh, that's pretty darn good. Well, not a coffee. I've got a quadruple shot of espresso this morning. The machine went a little haywire. It just kept right on giving me espresso. Well, I'll take that. All right. So if we think about what the different levels of support are, you can see here Darvis kicked in. There's a minor low in there. There's the daily price movement range. If I turn the 34 EMA wave on, right? So think about what a dip would be and then use that. So I'm not here to say that there's only one mean reversion. There's not, right? We all choose what our mean reversion is. There's not, and similarly, there's not just one dip, right? But a dip should represent sort of this measured move. I say measured because it's got to be measurable and it's got to be a repeatable measuring process. So maybe you like the last major move and a 38.2% retracement. Maybe you're a fan of what I like to call the Pingala and the 50% retracement, right? So those are all things that if you use consistently, you could start to test. And if you test, you can look at risk and you can look at win rate. And those are really the hallmarks to me, to being a trend follower, which is definitely what I am, right? Okay, Apple gap close on the daily. Let's take a look at Apple. If there's going to be a gap close on the daily, take a look here. So what's the gap? It's a big old hole in the chart. The gap would be represented by the close at 189.59 to the chasm of 191.63. Yahtzee. Okay. So there you go. So there's your little gap there. And that hole in the chart, that space where there was no trading, right? There's your gap. The cool thing is, if we were to trade lower, we'd end up in the daily price movement range. So take a look. This is here, let's put a little line on here. Here's my gap. Oh, how come it won't work? Active tool. There we go. So here's my gap roughly in this area, right? Notice how that pink line is inside the gray zone. That's the daily price movement range volatility support zone. So notice I'd not only close the gap, but I'd be in volatility-based support if that were to happen. We're trading at 193 and change right now, so I'm not holding my breath. However, it would make sense to keep an eye on the gap close. Gang, gaps do not have to close soon. They usually do close at some point, but I don't use it as sort of this overarching reason to put on a short or anything. It's just support. Right? Gap is just another technical level for support. And if it overlaps other things like volume or volatility, Yahtzee, we're in business. So I do like that, Avi. I don't know when we're going to get it, but again, it's less about predicting when that's going to happen, which I know everyone listening to me knows. It's less about predicting when it's going to happen. And it's more about what happens if we get there. So think of it this way. There's no way a batter at the plate knows what the pitch is going to be. They just know there's going to be a pitch, right? We don't know what's coming at us as the trader. We just know price action is coming our way. It's our job in that distance between the pitcher's hand and our bat and the plate, really, to decide if it's a pitch we want to swing at. That's where great trading waits, not in the prediction of the pitcher's going to give me a knuckleball, right? The art of trading is sitting and waiting. I think a lot of us know this. Remember one of the most cited lines from Jesse Livermore, right? Reminiscence. He used to say, what's the trick? And he used to say, sitting on my hands. I think the line is something along the lines of sitting on my hands. Got it? Doing nothing. And that's the hardest thing for a lot of traders, right? Great batters. What do they know? They know their pitch, and they'll watch pitch after pitch go by. This goes back to Grandpa Buffett and the circle of competence. Like he says, we are all batters. And I got that straight from Buffett, right? We're all batters. But we play in a no strikes called game. I can watch 1,000 pitches go by. No strikes are going to be called on us. So yeah, that's the way I look at that. If we get that pitch, Avi, we're in business. Yeah, we'd definitely be in business. All right, next up, UNG seems weak, but has tried to round up on daily thoughts. So we start off with NG, right? If I'm going to trade natty gas, I'm going to start off with the underlying futures contract. And this is the first time, and you mentioned it seems weak. Again, I'm not sure what time frame you're looking at it, Mark, but overall, this is actually the most bullish natty gas has looked in a really long time. But I'm looking at the daily. So granted, you might be in another time frame. So let me know what time frame y'all are looking at, because I might not be looking at what you're looking at. But when we step back to the daily, which is the most important psychology, you'll notice it's actually giving us a little sliver of a green trend. We have not seen a green trend in natural gas since, oh my gosh, since August or practically September of 2022. It's been a minute. It's been, 10 months. So yeah, this is a big deal that we're getting that little glimmer of green. And that would allow us, instead of waiting for oversold buys, it would do two things. This is how important that multi-trend, the very bottom of my chart is. This is how vital it is to my decision-making process and the things we do in the sector secrets room. Once that goes green, if it does for 2 successive sessions, no more shorts, buy the dip. So that's what I'm waiting for. I agree with you, Mark. It's trying to round up. I don't think it's weak per se. It's finally giving us the overall, hey, we might get an opportunity to buy situation. All right. So very cool. Very cool. All right. So gang, I think that is it. Yeah. Someone asked me, what's the Pingala? So yeah, if you look up Pingala, it's actually, that's what Fibonacci is, gang. We've been crediting Leonardo da Pisa, Leonardo for Fibonacci for eons. It's actually, all that stuff is rooted in Sanskrit poetry, which is kind of cool. So yeah, I like to call the 50% the Pingala, but all those numbers that we talk about and credit to Fibonacci, that's actually Pingala. Yeah, Google it. It's kind of fun. And yeah, that's the root of it. So we call it the Pingala. All right, gang. I will see you tomorrow, same time, same station. I know we have a day off. The markets are closed tomorrow, but I love doing Charts and Coffee on Independence Day. Not of all our members are in the US. So for a lot of traders, hey, we're up. It's another trading day. So if you have questions tomorrow, we do usually a slightly longer Charts and Coffee, a little bit more Q&A. So come on over before the fireworks start. I'll see you tomorrow. My Sector Secrets Mastery folks, I'll be in the chat room in just a moment. All right, gang, be good to each other.